distinguished speakers. We have Mr. Sivaram Maganty, Chief Business Officer, Happy, Mr. Ashish Ahuja, Chief Operating Officer, Fino Payments Bank, Mr. Jason Fernandez, President, India Operations, XREX, and Mr. Guy Mota, Head of Operations, Salary Fits. And the moderator for this session will be Mr. Dharmender Jhamb, VP, Public Policy and Government Relations.
So, good evening, everyone. This is Dharmender Jhamb. I'm from Paytm, look after the public policy and government relations aspects at Paytm. So, it's really delighted to be part of this panel and moderating this session. So, I think we are good to go, and time is so the structure that we may adopt is that at the start of the session, I may ask you for a 1 minute or a couple of minutes introduction to each of you, and where you may describe the work that you do at your organization and your organization's agenda, particularly with respect to the financial inclusion or accelerating the financial inclusion. And then I'll just brief the context of overall this session, and then I may ask you some specific questions or a broad questions I would be asking, seeking your viewpoints. Anybody can also add their viewpoint to a question which has been asked to anybody else. Okay, I've also shared indicative questions to all of you individually, and where I may be picking up questions from those. Any other aspects, if and Jared, just tell me that how the audience's questions would be answered.
So we are streaming live on all social media platforms. We're streaming live at the conference hall as well. And we've also got an app called Smart App, which will be basically how the audience can reach out to us. But I think we're already late. We're already 15 minutes late. So you can just start ahead, and whatever questions you have, you can guys just start right now, and I'll let you know if you have questions in the end.
Yeah. So welcome to everyone at this 28th Convergence India Expo, and we have an esteemed panel to discuss on the agenda on financial inclusion, to be very specific, that accelerating the financial inclusion in India. So the session would broadly cover the policy response and improving the preparedness for any kind of future plans for financial inclusion, and all small finance bank and payments banks are delivering the financial inclusion agenda which was envisaged at the time of setup, and what is countries and the financial sector's priority for financial inclusion for women, and what are the interventions which are required from the policy perspective, technology perspective, and tax reform perspective to further expedite the deepening of financial infrastructure across the unbanked geographical segments across India. So first of all, I'd like to welcome all of the fellow panelists, and first of all, I'd like to introduce Mr. Ashish Ahuja from Fino Payments Bank. So Ashish, welcome aboard, and would request you for your brief introduction to all the audiences, and thanks for being part of the panel.
Thank you so much, Dharmender. This is Ashish Ahuja, Chief Operating Officer, Fino Payments Bank, and a very good evening to the fellow co-panelists. Siva, good to see you after a long time, looking handsome, my friend. And a bit about Fino Payments Bank. We turned a payment bank about 3 years back. We target a core target segment of people who earn anywhere between about a lakh and 50,000 to about 8 lakhs. So that's typically targeted at the mass market segment, which is also a recipient or a target segment for financial inclusion as the country, as the country defines it. We were a fintech player, which was, primarily the largest BC business correspondent in the country. And we continue to do that work also alongside on the retail side, which we target customers on our own. And hence, look forward to the discussion where we shall be discussing financial inclusion in detail. Thank you so much.
Thank you, Ashish, and congratulations on moving towards the scheduled commercial bank. So
Thank you so much.
thanks. Yeah. So next, I would like to welcome Sivaram Maganty. Siva, a brief introduction about yourself and about your organization for our audience.
So thanks, Dharmender. This is Shiva here. I head the business at Happy, Chief Business Officer. What we do is that we serve the M of the MSME, wherein we would reach out to the micro entrepreneurs through a partnership model and offer them credits so that they can uplift their business and have a meaningful impact in their lives. So that's what we do. We are a 4-year-old startup, and we are a 4-year-old startup, and we have served upwards of 500,000 customers in the last 4 years. So yeah, we would like to make a meaningful contribution to the society through by offering our innovative products to the micro entrepreneurs.
Great. Thank you. From the lending perspective, lending is now is the unexplored arm of the financial inclusion. I would say that this would be the defining factor in next few years. Definitely. Thanks for being part of the panel. Then I would like to invite Jason Fernandez. Jason, welcome to the panel. May I request for a brief introduction for our audience and about your organization as well. Thank you.
Thanks, Dharmender. My name is Jason Fernandez. I head India operations for XREX Inc. We're essentially a blockchain trade tech company aimed to facilitate international trade to cross-border businesses, mostly in emerging economies, using blockchain. So we've launched a series of products and services, including essentially a full crypto to fiat exchange, cryptocurrency exchange, a SaaS My Exchange, something we call My Exchange, an escrow service called BitCheck, which is enormously popular. And not only in India, but also now in Africa, South America, Vietnam, and other developing countries. So we're essentially a trade tech company backed by sort of well-known VCs, including AppWorks, WI Harper, Black Marble, the founders of Skype, and mostly the Taiwanese government by virtue of their National Development Fund.
Great. Thank you, Jason, for brief introduction. And maybe this is a topic which will be like a kind of a growing topic and a most talked about topic about the crypto aspects in India and how will it structure and how regulations and government guidelines will get framed up. And that is something which the whole country is looking at, and how will it drive the financial inclusion aspects in country. So I think at last I would like to welcome Mr. Kui Mota. Kui, hi, how are you doing? Welcome aboard as a panel member. So would request a brief introduction from your side. Thank you.
Hi. Thank you, Dharmender. Good evening, all guys. Thank you very much for the organizers and supporters for inviting SalaryFit for being part of this panel. I'm Guy Mota. I should introduce myself as Guy, as the Indian butter, and I'm head of operations of SalaryFit here in India. SalaryFit, basically, we are a B2B2E platform that you can integrate in one side different financial providers or even any kind of providers to the payroll of entities for promoting better financial benefits to the employees of these entities. So we used to say that we are B2B2E, is for employees, and we are a spin-off concept of a company in Brazil that has been working that in Brazil for the last 20 years. And now, since the last 5 years, we have started our international extension to 5 other countries, a part of Brazil, and we are starting some pilots and few projects here in India in this current fiscal year.
Great, thank you, Guy, and apologies for pronouncing your name incorrectly.
No problem at all.
Okay, great. So now before starting the session, I'd like to give a brief context that where are we as a country in terms of financial inclusion and how we have progressed in last few years. So I think that this country has traveled growth of financial inclusion in the way it has traveled in the last 5 to 6 years. It is transformative, and see, many countries have financial inclusion led by telcos, led by banks, led by government, led by fintechs. So in our case, it is a kind of hybrid model where the strong push was there from the government side also. So I would say that it's government and fintech and bank as well as the last point is the regulator for framing the forward-looking regulatory guidelines. So I would first cover the government aspect, how government has contributed to the financial inclusion. That India saw the from the financial inclusion perspective, saw the world's largest financial inclusion drive in terms of creating financial access to the unbanked population of this country. So in March 2021, in last almost 6 years, 42.05 crore or 420 million bank accounts have been opened. So this is first of all, it's a Guinness World Record as per Government of India website, and actually it's not just opening an account; people are also using it. So it's like 141, like I would say 1,41,592 crore balance is there in these beneficiary accounts. Earlier, there used to be a very high percentage of the accounts were zero balance, but gradually those accounts became active and they have the balance, and people are utilizing those accounts. Then, so creating an excess was not enough. Then government actually launched this Pradhan Mantri Suraksha Bima Yojana, the insurance part of it, so that people start using their account and they start using financial services. And so they introduced the two most important term and accidental insurance schemes for common man at very minimal premium. So this is first time that a common man thought that insurance is for them also, because of the increasing insurance penetration at the ground level. That is also part of the financial inclusion. Government launched these two schemes. Now in terms of the accidental insurance part, it's 227 million enrollments are there as of date, and for the term side it's 100 million enrollments which has been done. Then government also thought that why shouldn't we see from the lending perspective, because lending drives the financial inclusion and solves the operating capital problem for businesses and for farmers for the crop insurance. So government launched two schemes primarily, the Mudra Yojana, Pradhan Mantri Mudra Yojana, where it gave small loans ranging from 0.1 million to 1 million amount to various citizens, and or rather businesses. And then to the crop, for the crop insurances, it gave the crop insurance to the farmers. Farmers contribute a majority part of the lending, so they actually gave the crop insurance to all these farmers. Now from the last part, I would say in terms of DBT, yeah, apologies for the break. So this is the way this country has traveled in terms of financial inclusion growth. Now I would like to have opinion from the panelists, but particularly from the payments bank perspective, that how payments bank was a kind of a differentiated bank which has been created with a perspective to drive payments at the last mile, not with the going ahead with a conventional brick and mortar approach. Government of India, or rather RBI, thought that payment will drive the inclusion. So this payments bank concept was launched, and being like I'm from Paytm, and we also have this Paytm Payments Bank. But from Fino perspective, I'd like to understand, Ashish, how has been the journey? How do you think that how this payments bank have actually contributed at the ground level for driving financial inclusion in this country?
Sure, Dharmender. So I think one needs to look at the background first. So Fino, in its current avatar, is the payment bank. 2006, when Fino was conceptualized as the company, has been working at the bottom of the pyramid. We were the largest business correspondents working for multiple banks and multiple financial institutions, including the government of India at a particular point in time. Prior to becoming a bank, over 120 million enrollments done, broadly about 55 million for the banking sector, 35 million for UIDI, and about 35 to 40 million for RSPI. The rest would be some other projects put together. So that's the scale at which financial inclusion participation for Fino was, right? 2017, we converted to a payment bank. The bank has two sides to it. Unlike the corporate side of any bank, where you would be looking at, credit and working loans, working capital, term loans, LCs, BGs, trade finance, and so on and so forth, we work for other banks and continue with our work on financial inclusion for other banks as a corporate BC to schedule cover to other banks. One aspect. Secondly, if I was to just give you a context, AEPS, micro ATM, we dominate the market. With micro ATM, we have about 60% plus market share. AEPS, we are the fourth largest acquirers. DMT, we are the fourth largest bank on domestic money transfers. These are all retail transactions, mind you, small value transactions, and doing over close to about 13 to 14,000 crores of throughput in the customer base, which is broadly the financial inclusion customer base, people who earn between $1.5 lakh to about 7 to 8 lakh rupees a year, called the mass market. And hence, to my mind, from a Fino perspective, I think we have we have taken the agenda of financial inclusion to the next level. Also, in respect of digitizing the financial inclusion agenda, we were on the top of the meaty charts last year for the last practically in the top 3 for the last for the full year. So both these put together, to my mind, I think payment banks are driving that agenda, and I would say that each one has its own flavor. Airtel naturally would have a different flavor. Paytm has a different flavor. India Post and Reliance Jio would have a different flavor. These are the 4 or 5 payment banks which are doing something with respect to the agenda set out by the government or by the mandate given by the Reserve Bank. So I would say that the payment banks, in nutshell, have covered large distance in driving the financial inclusion agenda set forth by the country, and utilizing the products which are actually I would say the products which are required by the bottom of the segment. So if you look at AEPS, it has stood the test of time as a product thanks to NPCI and UIDI, I would say. All the government benefits that have come in COVID times. Practically the throughput in AEPS from a government perspective has gone up from practically 10,000 crores to 20,000 crores in offers transaction, and which is all being serviced by the BC model. And largely, I would say Fino Payment Bank's own model is an asset-light model in which we have very few branches, but over about 3 lakh merchant points of our own, and about 3 lakh through our partners. So, with this kind of a model, right at the bottom of the pyramid, amongst the people, so I think the agenda is being met quite beautifully, and but still, there is a lot of space to do more. Back to you, Dharmender.
Great. So, Ashish, I totally agree with you that all of Payments Bank have its own flavor, and and the best part is that Payments Bank, with not very much of the revenue aspects, like lending actually generates or drives the revenue, still we have covered large milestones in terms of financial inclusion, with the unconventional and a far-reaching approach like Fino has been very, very instrumental in terms of AEPS driving, and which is primarily for the last mile done by BC's business correspondents in India. So thanks for your inputs, and now I'd like to have views from Shiva. Shiva, a notable policy measures have been taken by RBI by introduction of like priority sector lending to finance the credit needs of the underserved in last 40 years or so. So how do you feel that overall improvement has been made, and how do you feel that there is a need, a significant need, like your business to come in and fill the gap? So my question is, if there is a gap, if yes, then how are you trying to fill the gap? And still, if there is a gap, then how it can be filled?
Yeah, thanks, Dharmender. I think first of all, I think we need to compliment and congratulate the government for all the efforts it's been doing to drive the the credit growth, especially in the credit starved market. Having said this, India is a large country, and all of us know the statistics. If you look at the MSME market, upwards of 80% of the MSME segment is not within the formal credit environment. So there's a huge credit gap. I think one of the reports that we have access to say that the credit gap in the MSME segment is upwards of $400 billion. So that itself provides a huge opportunity of what's possible in this space. And as Ashish was mentioning, thanks to the financial inclusion, new sets of industries got opened up. Say, for example, the BC network itself. So somebody has to kind of support the last mile BC agent who's serving the mass markets to get people into the financial inclusion, right? So unfortunately, segments like that, and which have not been offered credit by the formal banking system. So we approach such segments through a partnership model, like the way Ashish was mentioning, that they have a large franchisee of a distribution network of BCs spread across the country. So what we do is that we reach out to such franchisees who have such large networks, and one must understand that in this segment we may not have the same data sets to underwrite the credit, right? So the way the banking system currently underwrites credit may not be applicable for this segment that we're talking about. So you need to be innovative in terms of understanding the market. You need to be creative enough to understand what kind of data sets are available, and of course, lending is all about credit, is about risk business, right? So one has to be careful about what kind of risks are involved in the data that you're underwriting. So what we do is that we have structured our business model in such a way that we gather reliable data through the transactional history that happens between the merchants and the network partners, and we have a proprietary rule engine, and we've got a machine learning model that works, which predicts the creditworthiness of the merchant, and then the credit is offered. So thanks to technology develops its own model. Until a few years back, mobility was not an industry. We did not know that Uber and Ola would revolutionize the way people would commute from one point to another point, right? We did not know that Swiggy, Zomato would change the way food habits change in the country. So when you have platforms like that coming in, it creates an opportunity for you to explore, and these platforms bring in prosperity for the the bottom of the pyramid entrepreneurs, the marginalized entrepreneurs. So by tying up with such kind of platforms, you get access to rich transactional data using which you can underwrite the credit which probably no other bank or no other the existing current the financial industry offers. So we see immense opportunity in the informal segment, and there's a huge opportunity. And having said this, the measures that you mentioned some time back, the government of India initiatives, be it Mudra, the Shishu and the Kishore, especially the Kishore and the Shishu segments of Mudra loans, they have also been playing a quite significant role in uplifting the the micro entrepreneurs. So yeah, overall, I think it's the efforts of the government are commendable, and then technology is bridging the gap there. So great. So the space looks very exciting. Over to you, Dharmender.
For very gap, and actually how the technology has supported in bridging that gap, and how data sets have been leveraged to understand the risk and offer loan to the merchants who are in need of it, and where banks are not in position to offer those loans. So for sharing the insight, because I would part of the financial inclusion, which will drive the financial inclusion in coming years. So this is about, now I'll move to the next aspect, which is most talked about, I would say, aspects in the country. To Jason, so my question to you is that with rising use of platform as a service and software as a services in the financial sector, what do you think whether the regulatory aspects or right amount of importance have been given on the regulatory aspects, or by the regulator or the policy makers to actually accelerate the adoption of PaaS and SaaS? And if you see that any good practices from other countries, would you like to share so that the growth of the fintech sector to drive financial inclusion can be further increased? Over to you, Jason.
Sure. I'll speak to the regulatory challenges that we face in the cryptocurrency industry, because that's sort of been my focus. And we've been hearing whispers, of course, it's all over the news that India is considering perhaps a complete ban on cryptocurrency. And sort of the messages that we're getting are mixed, because on one hand, we have the finance minister saying essentially that to some degree cryptocurrencies will be permitted, and then we've heard obviously different people in the government say different things. So I think the industry would benefit from government speaking with a unified voice on that. That's probably the first point. The next point that I think is important is it's really important that cryptocurrency as an asset class continue to exist in India. I think that it's up to people whether they feel like they should be able to invest in it. I think government's role should be making it essentially safe for the consumers and ensuring that certain sort of best practices are adhered to. So I would say that I like the way that the Indian government has looked at regulating the OTT market, where sort of you have the first level, which is within the company itself. It's sort of an ombudsman in the company. And then the second level is an industry self-regulatory body. And then only on the third level is an interdepartmental committee that sort of focuses on these things. So I think something like this, when it comes to cryptocurrency regulation, would probably be beneficial, because it's probably not in the country's interest to look at this in a punitive sense, but more to look at it as sort of a way to increase financial inclusion. And I think that's really core. The technology does tend to increase financial inclusion, and I think it's important that the government recognize that and regulations sort of be in line with that. And there are other countries that have adopted regulation, FATF guidelines, for example, Financial Action Task Force, that could sort of mitigate issues that the government might have with things like money laundering and stuff like that. So I'm a fan of the way the government has regulated some of these industries. I'm really cautiously optimistic that when regulation comes around to cryptocurrency, it's equally positive and consumer centric in that it's protecting the consumers from things like scams and really bad actors in the industry that even us as exchanges, we don't obviously want bad actors in the industry. We have very stringent AML policies. We use CipherTrace, and essentially all remotely suspicious transactions on our exchange are blocked. And so to that extent, we believe that there's a lot that government can we can work together with government on.
Great. So just tell me one thing, that do you feel that any particular country has adopted a kind of regulator that is more suitable to our circumstances? Would you like to give any examples?
Sure. I mean, sure. Sure. We've seen Europe take a lot of countries in Europe have taken a very progressive view of cryptocurrencies. The United States, for the most part, has taken a rather progressive view of cryptocurrencies. And most of the United States' efforts has been toward stopping bad actors from essentially releasing securities and having people basically invest in them. That's sort of been the focus of countries like the United States. But Europe has been incredibly progressive. The UK fintech market is exploding, particularly because of policies that the government has implemented there. Malta, well known for having a pro blockchain policy. They were one of the very first countries in Europe to release the VFA, the Virtual Financial Assets Act. And I think that's actually core, because we really should start thinking of so-called cryptocurrencies more as crypto assets as opposed to currencies. And I think that nomenclature will give some clarity to government in terms of what types of regulation are appropriate, as opposed to using the term currencies that implies, that it's on the same par as, let's say, the US dollar or INR. So I think that's something that we can possibly look at. Yeah.
Thank you, Jason. I think the good practices that may be adopted. So thanks for this. Now I'll turn to Guy. Guy, this is something which is kind of the salary fit. It is one of its kind of tech-based services which considerably reduces the cost, including time and efforts. So other than the cost-saving aspect, what do you think that what is so unique or exclusive in this model that benefits the user and also look forwards for the adoption in the unbanked citizen segment or underbanked citizen segments? Would you like to understand your views on this?
Sure. Thank you, Dharmender, for the question. So, of course, Salary Sheet is a platform for promoting better financial benefits to employees. And when you're saying better, it doesn't mean that just we're reducing interest rates and making that cheaper. We know that here in India, of course, it's changing now with the new banks, with the fintechs. Now we are promoting financial inclusion. Indeed, we have a lot of other fintech companies just raising up here I'm based in Gurgaon, Mumbai, Bangalore. But we still know that for most of the individuals here, and especially in our market, the employed-based people, the employees that are earning less than 20,000 rupees per month or less than 15,000 rupees per month is not really easy for getting access to financial services. So our platform, we enhance the ability of banks and other financial providers to have a credit score or have a credit risk about these particular individuals. Bringing them the real-time information from the payroll about my attendance details, about my salary information, about my KYC information, everything in real time, supported by the corporate. So when someone is looking for a loan or looking for any kind of service, the employee is allowing the corporate to sharing his personal data with a particular bank or with a particular provider for having access to that and analyzing this information on real time and making that even faster. Even if someone on this profile of getting a salary less than 10,000 rupees per month, being able to get any kind of financial product, we know that it's going to take a lot of time, like 1 week for KYC verification, for getting these details from your corporate, for providing a lot of documents that's required here in India. And we are being able to bring that in at least like reducing that for 24 hours on the process of like approving someone. And of course, we know that who is needing money, they are needing that on this extra time. And more than that, our platform, we are able to control a kind of a percentage of our salary that we can use for this kind of financial benefits. For example, in some of the markets that we are operating right now, such as Brazil and Italy, we have regulations. In Brazil, it's allowed to have like 35% of your salary committed to financial products. In Italy, it's 25%. So it means like if I'm looking for a loan, or if I'm looking for savings products like mutual funds, or even sending part of my salary directly to a wallet, I'm able to commit 30%, 40% of my salary with the commitment from my employer as well to deduct this amount and send directly to this provider. So doing that, we are reducing risk, we are reducing interest rates, we are also bringing like faster options to all these employees that maybe right now still being kind of neglected by the usual financial market that we have, not only in India, but overall all the other countries that we are operating.
Thank you, Guy. Guy, just one follow-up question, that it is believed that as per the reports that 81% of our working populations is in informal sector. So whether the system that you are proposing or so whether it caters to that particular informal sector where the salary is very minimal and this is unstructured and there are not very much processes which are defined. So do you think that your software will drive some level of inclusion at that level? Because that is a sector where we need as a country the financial inclusion, and they should start using the financial services very extensively.
Sure. Even here in India, we had some discussions with like Rajasthan government before that you can use the same concept, bringing kind of another employers or another institutions as a custodian of this data, and also taking care of these information of like particular to the being in our case the employees. So I will just give you a quick example, like for example, farmers when they are like having their daily productions and selling that to a cooperative, like a milk cooperative or any other kind of like dairy milk products cooperative, and based on the ability of like the payment from these cooperatives to send it to farmers, we can have the same logic to different segments, to different industries, just being on a position to host all this data for different kind of industries. And just like if you see the percent of market here, the labor force here in on the formal sector, still a mass of employees being neglected by the market, because like for example in industry, in an auto industry, where maybe 8% of the employees they are from the blue and gray collars, and maybe 10% only are from the white collars. So most of the banks here have been working for the last like several years and having a lot of market to approach and work with, just focusing on the white collars. So even with 20%, is still a considerable and a huge number that needs to be carried here in India.
That's really insightful. That's really insightful, because we need systems which actually caters to that particular segment, so that they start leveraging financial inclusion or the financial services offered by the innovative model which have been already experimented abroad. So thanks for it. Ashish, just one question, which is very close to the financial inclusion agenda for this country. Like, it's important that that women are the economic agent and the for the country. So, is Fino or do you think that first of all, what are the, if you would like to share some experiments or some products which you have developed for driving financial inclusion, for particularly for women merchant or women customers, which actually helps them to onboard easily? And overall industry, what is your view that what all other things which can be done in this particular sector to drive or to empower women to use financial services extensively?
Sure, Dharmender. So, in context, again, I'd like to start with an example, and I think my friend Shiva would relate to it because he used to drive that agenda when he was with us at Fino. When we used to be the largest partner for the government of Andhra Pradesh for disbursement of DBT benefits, and I think at the peak of this thing, we had over 5,000 women CSPs who were dedicatedly deployed in Andhra Pradesh to disburse DBT benefits on behalf of government. And at that point, Fino was the largest non-government entity to disburse funds on behalf of governments. Right. So we continued with the same avatar, and we believe that there is no gender bias when it comes to delivery from a financial inclusion standpoint. Today, broadly, in terms of numbers, I would say about 15% of our merchant base is women. About 19 to 20% of our CASA base is women. Coming to specifics that we believe, that we are doing. One is we're working with Women's World Banking to develop. We've carried out some pilots. We've carried out some surveys, and now we are going into a full-scale deployment of a savings product which is typically targeted at women, because in the segment that we operate in, women are the core towards the saving piece, and hence we're coming out with a very intuitive application, intuitive UI UX to help women to save in pockets, which is very near real to how they do it in their houses, where they put money in different envelopes to say this is for the kids' education, this is for the grocery, and so on and so forth. So, we're trying to replicate that digitally and targeting it specifically at women. And like I said, we're working very closely with Women's World Banking on this. The other piece is that we are coming out with certain goal-based saving products, which are also targeted at the women account holders. Back to you, Dharmender.
Sure, thank you, and sharing the insight and your alliances with Women World Banking and driving inclusion, because I understand that we, all financial institutions, do not create any kind of bias, but we sometimes we develop products focusing their particular needs. So thanks for sharing the particular insights on this aspect. So Jason, just one question from your side, that from your side, what do you think that as in the trade tech aspect, that how it can be more inclusive and sustainable, and how it can actually impact the growth of SMEs, like I would say small and medium enterprises, that how it can further expedite the adoption of like PaaS and SaaS services for them, so that they can actually increase their growth, increase their productivity by adopting all those innovations that organizations like you bring in.
Thanks, Dharmender. Well, basically, I believe there's enormous potential for the technology. I mean, blockchain was ranked as one of the most transformational technologies for trade-based, in the trade-based sector in a recent World Economic Forum global survey. And what's interesting is while trade tech creates benefits like efficiency gains and new digital products and services, also positive environmental impacts, it also faces challenges from fragmented regulations, lack of data harmonization, and obviously the widening digital divide. Now, with XREX, we launched our crypto fiat exchange in September of 2020, and we grew just immensely. And within 6 weeks, we were doing $1 million a day. Within 10 weeks, we were doing $2 million a day in volume on our exchange. And we also have a escrow service called BitCheck, which does a lot of cross-border trade. And something like $25 million in BitChecks were written by our users just in January alone. So I think the success and the speed at which that we see the success is sort of evident in that, in showing the potential of blockchain to sort of revolutionize cross-border trade and trade tech. So just to give you an idea of some of the real-world use cases that our technology and trade tech in general can sort of help with, we have a company that works with us. Is essentially they do business cross-border in Egypt and most of Africa. And the lady in charge essentially is able to function in all these countries. And what they do is they manufacture rickshaws. And they sell it to the governments of these countries in some cases, and also to certain companies within those countries in Africa. But because of the USD shortage, and they have obviously a problem of local currency depreciation in Africa, that's a huge issue. It became really, really hard for her to receive payment. So what she used to do before XREX started working with her was she did something known as a double trade. So for example, she would manufacture the rickshaw and then sell it, and then the people would pay her in another commodity. So for example, the people would pay her in things like coffee beans, truffles, even fish. And this sort of double trade can cause major problems, right? Because now she has a commodity, and then she has to export that. And then she also has to take all the risks during export and find a buyer. So at one point in time, one of her customers paid her in fish. And this is basically for rickshaws. So her customer paid her in fish, and she managed to find a buyer in China, had the fish shipped over there, but the port in China essentially completely blacked out. And so there was no power, and all the fish got spoiled. Now, she was an enterprising lady, and so she was able to sort of turn that rotten fish into pet food. But you can see how this has, major issues when you're trying to do cross-border trade. Now, all she does is when she gives the people the rickshaw, the buyer pays her in Bitcoin, or they contact her local My Exchange in that area, the company that one of our products. And they use local currency to buy maybe Bitcoin or cryptocurrency, and then able to pay directly pay USD. So that sort of helps at the very most basic level, inclusion and drive sustainable trade, right? Because these sort of inefficiencies are huge problems, particularly for smaller businesses. So to that extent, I think that trade tech can definitely democratize people's access to cross-border trade and make it more efficient. And that's certainly what we've seen with our experience.
Great, Jason. Great. Thanks for sharing that particular example of Bitcoin, how it and about its use cases and how it can be used, and how trade tech can contribute towards the financial inclusion in this country. Thank you. And because we are coming close to the closure of this panel discussion, but just one particular aspect from each one of you, that what should be in next 1 minute or so, 1 minute each, that what do you think that should be done, 1 or 2 points should be done in your particular sector to further drive the financial inclusion? And I would start from Guy. Guy, would you like to say something basis your experience from other countries, that what should be the regulatory or technology or any other aspects that country should do to further accelerate the financial inclusion?
Sure. Thank you very much, Dharmender. So SolarFit, we are a fintech / HR tech company. So what we see that India now is going forward and transforming the country, we need to improve, and of course we need to count on it with different institutions and from the government policies as well for promoting better financial education. We know that the culture here is like saving 30% of your wage, even if you're getting a really small salary. That's good, but of course we can use the credit, we can use other financial products in our behalf to improve our life, to get a better quality of life here in India, and access to few other products and stuff that maybe for the last past years it was like only dedicated for the top of the pyramid. So I think that promoting better financial well-being in India and financial education would be crucial for growing this financial inclusion in a sustainable way.
Great, thank you. I would like to ask Jason. Jason, what is from your perspective that what should we do, like in near term or on a long term structurally? What should we do?
So I'd say that the cryptocurrency industry, the crypto asset industry, has somewhat been seen as distinct from the fintech industry, at least in India. It almost seems like on one end they're trying to promote fintech and financial inclusion, while at the same time tamping down crypto assets. And I think that's probably not the best strategy. I think that if cryptocurrency or crypto asset companies were seen more as in line with the government's view of increasing financial inclusion, which has been the case pretty much all around the world. India is the second largest country, unbanked country on the planet. Something like 1 in 8 people are unbanked in India. These are the sort of problems that blockchain was actually built to fix. And it's upsetting that in the areas like South Asia, most of South Asia, this sort of technology is highly restricted, and so it doesn't really fulfill the promise that the technology was sort of built to work with. So I think that to answer your question succinctly, I think if the government saw us more as partners in the goal of promoting financial inclusion in the country, because we certainly see ourselves as that being our primary mission. Our CEO Wayne has spoken many times about the reason we focus on countries like India, emerging economies like Africa, is because financial inclusion is one of our missions. And so if government was able to understand that we are aligned on that, I think that would be much better, both for us, but also for the government and for people in general.
Sure. Thank you. So coming to you, Ashish, like now, Fino has traveled so far from 2006 to 2021. So what's next for the industry, for the country, to drive it further to reach to remaining unbanked segment?
So primarily, if you look at it from a recommendation standpoint, I would say from a model standpoint, a couple of things, and this is something that we've been driving through various industry forums with the regulator and with industry bodies. One, from a payment bank perspective, I believe that being a profitable payment bank, I believe we've cracked the model. But if there's something more that can be added to this model to give a fillip, so these are my couple of recommendations. One, increase this 1 lakh limit at end of day for the saving bank account to 5 lakhs. One, because the insurance covered by the government of India has gone up to 5 lakhs. So this should be doable. It creates a perception in the mind of the customer that there is no limit in the account, right? It's more a perception issue. Secondly, allow small value credit. Define it. Maybe 1 lakh, maybe 2 lakhs, maybe 3 lakhs. Define it, but allow small value credit. Because BC guidelines, when they came out, had also thought of small value credit through the BCs, and hence payment banks, to my mind, should be allowed small value credit. Thirdly, payment banks as such are driving the financial inclusion agenda of the country as one of their main objectives. For doing that, to be kept in the same sphere of taxation and policy as other financial institutions, I think that needs to be relooked at. Devices, any types of integration that you do with government bodies, let's say UIDI, NPCI, anywhere, wherever there is a cost structure involved with, whether it be on a one-time or a per transaction cost, or taxation for devices that are utilized to drive financial inclusion. I believe these need to be looked at. Taxation needs to be lowered. These per transaction fees need to be either waived off or lowered considerably for these institutions to go deeper and in more width into the hinterland to drive the agenda further. Because for this, financial inclusion is not a line item on the P&L. For companies like Fino, it is their P&L. That's the bread, butter, and heart and soul of the P&L. It's the heart and soul of the company. And with these few initiatives, you can really take it deeper and further. I think there's a whole lot that the government is doing. A few of these things will help us a little bit more. Back to you, Dharmender. Thank you so much.
Thank you, Ashish. So last 1 or 2 minutes, Siva, that explain us that in lending, because I believe that lending drives financial inclusion because it serves the need of the last mile where they get into the trap of the undocumented credit. So this lending solves the main problem of the last mile. So just suggest me that because in the recent, I think RBI has formed a recently committee on particularly on the lending platforms, on the digital lending platform. So what do you think that for driving financial inclusion at the last mile, last 1 or 2 minutes, give us some views that what could have been done or what should be done in next few years to solve the lending problem for the country in the last mile.
I think the environment needs to kind of work on product innovation because that needs to be fostered because the requirements of this segment are quite different. If you look at the way the products are offered today, would they be good enough to kind of drive the agenda? I'm not too sure. The products have to be completely radicalized, I would say. The way you need to wear a completely different set of lens to kind of design and deliver those products for financial inclusion. The products have to be, far more saturated, smaller, shorter tenure kind of products which need to be coming in. And, as ecosystem, we need to evolve and drive more new to credit customers, whatever it takes from the regulator side, from the government side. I think that environment has to be facilitated to drive more new to credit customers here. And there has to be incentives which need to be given to players who are in fintech, who come up with innovative products. And cost of capital is one thing that needs to be looked at for this segment. That's substantially high, unlike the rest of the industry. So I think these are some of the things that need to be looked at to make sure that the bottom of the pyramid guys get the right kind of credit to uplift their lives.
Great, thanks. Really strong point. So now we are at the conclusion of the panel, and deeply thanks to the diverse set of panel. I would say that we have from the payments perspective, we have perspective from the lending side, perspective from the crypto side, and perspective from the solution or the platform which drives inclusion in terms of giving salary, or the platform which drives the inclusion from the salary side for the MSME sector or for the informal sector. So from my side, it's really insightful for me to understand these all points, and really thankful for all of you for giving your time. And I think we are good to conclude this panel, and great learning for me. Thank you all. Thank you.
Thank you so much. Same to everybody.
Have a great evening.
Thank you all.
Sure.
Thank you, gentlemen. That concludes today's sessions, everybody.